Hey, what's up, everybody? Y'all know how it works. Let me know if y'all can hear me in the. Let me know in the section if you can hear me, so we can get on to chopping this fable. If you can hear me, give me a thumbs up, or give me a like, or give me a yell, give me a something. Let me know you can hear me. If you hear scratching in the back, that's the dog that I'm fostering, Cammy. She's doing her thing. Maybe she'll come out during this live session. Just giving it a minute or two, let people join in, and so we can get this thing started. Hey Frank, how's it going? Vita, hey, how's it going? For the people that's new to the channel and don't know, ask all your questions in the chat. I'm gonna go through the weekly wrap up of financial news, and then I will get to your questions, and then I will end it with stocks and just stocks and stuff that I see that may be an opportunity out there. Again, it's not financial advice, but it's the stuff that I'm following. So highly likely that I will be doing some of the things that we talk about. All right, so that's about a minute past the hour, so that's enough for me. So let me get into it. All right, I just got my notes sitting here, so you see me looking down. It's because I've been tracking notes all week about what's going on financially. And if you see me looking behind me again, that is again Cammy. She should be right here. She's trying to come out, but it should be Cammy coming out, trying to say hello to the camera. But first up, report came out. This was on Thursday. Tesla reported a 14% decline in sales year over year. 14% decline. And I think a lot of that has to do with, that has a lot to do with the fact that the Trump saga, him backing Trump and things like that, a lot of deferment of people. Hey, Ludine, how's it going? A lot of people, turning off from Tesla or what have you. But for the people that own the Tesla stock, we talked about it last week. It's good. The robotaxi thing started in Austin, and I believe that will be a $1 trillion endeavor once we get there. But $1 trillion added on to what Tesla already had. But now Tesla got some problems on just the EV front in general, as far as people wanting to buy their vehicles for their personal use. So that's what's out there. So sales down 14% year over year. ADP. For the people that don't know, ADP is the people that process most, not all, but a large percentage of the private sectors. They do a lot of their accounting or just payroll, not accounting, but payroll. And ADP reported on Wednesday that the United States for the month of June lost 33,000 jobs. The estimate from Dow Jones and all those people that's supposed to be in the know was expecting a 100,000 job increase. But in the private sector alone, it was a loss of 33,000 jobs. With that, and then now you're wondering where the jobs are coming from. Microsoft just announced on Friday that they're laying off 9,000 employees. That's on top of the 6,000 employees that they laid off in the month of May. So that's the white collar sector of the economy is the one that's getting hit the hardest. It's not the blue collar sector. It's more of the white collar sector. And we've seen this for months. And then I'll have a diagram in a minute to tell y'all about that I'm looking at right now. But that's something that's out there. Amazon just announced that they launched their 1 millionth robot in the centers, the distribution centers. So when robots and automation is added, that means human jobs are lost. And then for people that don't understand how that works, is just think about it. I mean, I know we have the humanality when it comes to it, but understand this is what's going on. When you hire an employee, meaning a human, you have to pay them a minimum wage or more. You have to you have to match a certain percentage of their 401k. You have to pay a percentage of their health care, and then they have time off or what have you. When you introduce automation or robots or whatever to the scene, you pay a big price up front to implement the robots, but you don't have to pay for automation. I mean, you don't, not automation, excuse me. You don't have to pay for health care. You don't have to pay for 401k. You don't have to pay for time off. And then the crazy part is humans, they work 8, 10, 12 hours a day, but robots, minus the charging, they can go 24 hours a day. So that's what it is. I mean, I remember back in the day, people can, argue about, pushing up how much money we make per hour. But if your job can be automated, then you really don't have any negotiating power in this day and age where technology is today. And I'm not saying that to say don't negotiate. I'm just letting you know where the scene is at right now, far as how these things work. Me, I've done automation on teams, and I've worked to eliminate a lot of jobs. I'm just giving you the true reality of what's going on. I've worked with Fortune 500 companies to introduce automation into their organization, and it eliminated jobs. I'm telling you that from just me, boots on ground, what's going on. And I've been talking about automation for 3-4 years now. A lot of people wasn't hearing about it in the news media, and they thought that, of course, I'm crazy, but I was seeing it live in a living color. And I was telling everybody, hey, if your job and you do redundant tasks over and over and over again, and you can put it in a program, if you can do it in coding, if you can, it can be mimicked, it can be replaced. And yeah, the company will pay the upfront cost to eliminate all the other costs dealing with a human in that environment. So just understand that's what's going on. Now, I'm not telling you don't negotiate your prices or anything like that, but understand the competition is not somebody else that's more educated, more advanced, or better skills than you. It's actually what you have going on is more accessible or easy to automate, that a robot or automation or programs will replace what you're doing. What else we got going on here? All right, trade deal. Trade deal came out on Wednesday with Vietnam. For people that's been following this channel for more than a day, I've been a big proponent of Nike when it was down. Nike stock, that is. When it was down, accumulated many shares. Like I've told you many a times that I've been having my wife and everybody else buy the Nike shares, especially when it was down. But again, the trade deal with Vietnam, if people don't know how that matriculated. So now U.S. can sell to Vietnam with no tariff, but Vietnam can sell back to the United States, and I think it's a 20-25% tariff on the things that Vietnam sell back to the United States. So that deal is done. Nike stock, it was at 53, is up to like 73 now. If I'm looking at it, I'll actually pull it up to make sure I'm not selling y'all a bill of goods. But Nike's at 76 right now. So, we got like a 40-50% return. So when I was talking about Nike when it was down to 50, now we at 76. So for the people that got in on Nike, salute to you. But if you didn't get in on Nike, you still got, I believe you still have time. And I'm telling you, and my family and my household, we are still buying it. And we'll stop buying it. Anything above the 80 range, then we'll stop buying it and just let it float. But we picked up a lot of shares in the 50-ish range out there. That was a trade deal with Vietnam. Home insurance is going up for you, especially the people in Florida, homeowners. Homeowner insurance is going up. Texas, I know the insurance is going up. I've talked to many of people in the past 2 weeks that's telling me the different nuances and things of going on of their home insurance is rising in these different states, and they don't have the the calamity that we have here in Florida with hurricanes and what have you. But insurance is going up, and people understand insurance is a collaborative thing. It's not just state by state. So if Allstate works in Florida and Allstate works in Texas and Allstate works in Oklahoma, if Allstate, I'm just using Allstate as an example. Trust me, I don't know nothing about Allstate. But if Allstate have a deficit in Florida, everybody, everywhere that Allstate operates, have to compensate for that deficit. It's not just, oh, well, we're going to take a loss in Florida, but we'll take a profit here. Everybody has to compensate for that, and their prices are going to go up. So when you see Florida and people are like, oh, I ain't going to move to Florida because their insurance high, everybody else insurance high if they're using the same insurance company. And it's a collaborative effort going across the board. So just so y'all know. And then again, for the people that's new to the channel, please ask any questions you want, financially driven. Ask that in the chat section there, and then we will get to it. I promise I will get to it soon because I'm almost at the end of my list of financial news that's coming out that's affecting you as a, middle class, lower middle class people. That's the aim point here. I'm not here to talk about the people who have money and then know how to navigate this scene because they already know how to do it. Why inform them when they already doing it? I'm here to inform the people that are not as proficient or understand what's going on as far as the market. Another thing that came out. So again, I told you earlier that the ADP, they said it was 33,000 jobs lost in the month of June in the private sector. But when the non-farm payroll, which comes out from the government, they came out and said that it was 147,000 jobs added for the month of June. So what that looks like is there was a lot of government jobs added in the month of June. And it wasn't added on the federal side. What it was, especially with this big, beautiful bill and all this other stuff that was going on, a lot of state administrators had to be added to the system in each individual state to compensate what a lot of things is big, beautiful bill, and that's Trump's words, not mine. This bill for taxes, it transferred a lot of the regulation to the state. So that added a lot of jobs in that sector. So the private sector lost 33,000 jobs. The government sector added 147,000 jobs. So just want to put that out there. All right. That's a good question, and I'm going to answer this question right now. Levita asks, so will insurance going up affect renters? Yes, it will affect renters. Now, again, it will affect renters, but it depends on who your landlord is. So now, for me, and I'm just speaking for myself, I do have some properties that I self-insure. Meaning self-insure, meaning I don't have insurance on them, but I own them outright, and I self-insure them because the insurance rate just got insane impossible. But for the people whose landlords still owe a mortgage, it's mandatory they have insurance no matter what the cost is. So if the cost rise for the tenant, if the cost rise for the owner to be cash flow positive, hopefully that's what the owner is doing, then it will affect the tenant also. Now, again, it is dependent on how the landlord structure is set up. If the landlord owns it outright and they say, I'd rather self-insure than pay the insurance, then so be it. But for majority of landlords, they have a mortgage, and that the output that they have to do from the rents will go into what the tenants will have to pay, and then landlords will increase the price. That's just the true reality of it. And I try to, for the properties that I have owned outright, when the insurance rate is just, it doesn't make absolute sense. And it's just me. This is not a, landlord investor thing across the board. This is just me. I always try to negotiate my prices so the tenant don't have to sit there and struggle. But if I'm in a situation where the insurance rate just is insurmountable, I will have to pass that along to the tenant. But that's usually my last grasp at it if I can't find another way to figure it out along the way. But yes, that's a good question there. That is a big impact to tenants because the landlord will transfer that money on to the tenants. Frank, I'm gonna get back to your question. All right, so the one that everybody want to talk about, and I'm gonna bring it up, is the big beautiful bill. The big beautiful bill. Right, left, indifferent. I don't care. Only thing I care about is the facts. And then this is the facts. So I'm looking at a chart. So if I'm looking to my right, it's not that I'm not paying attention to you. It's just I'm looking at that. So things are changing in the big beautiful bill. And this is for people, if you listen to the news media, they're going to have you feel one way or the other. If you listen to Fox, they're going to have you thinking it's the greatest thing ever. If you listen to CNN, they're going to have you believing it's the worst thing ever. But let's just get to the facts, the brass tacks of it. So the first one, standard deduction. The standard deduction does increase. For people that don't know what the standard deduction is, the standard deduction is the amount of money that they eliminate before you start paying taxes. So if you make $30,000, the standard deduction is $15,000. That means you get taxed on $15,000. But the standard deduction increased from $15,000 for single to $15,750 and adjusted for inflation. So that's a less amount of money that you will be taxed on. Standard deduction. Bonus deduction for adult children. For adults, older adults, excuse me. It's bonus deduction for older adults. It was $1,600 before for ages 65 and older. It raised to $7,600 for ages 65 and over. And then I can go with $8,000 for unmarried, not non-survivor spouse for 2025 to 2028. That's what it is. Salt tax. The salt tax is something that most people don't pay attention to because it deals with the more wealthy individuals. The salt tax was raised, so now wealthy individuals will be able to write off a lot of their local taxes to the federal government. It went from $10,000 to $40,000 a year. So that was a benefit for the ultra rich out there. I'm not gonna lie, I benefited some from that also because that salt tax was killing me. Child tax credit. Child tax credit. It went from $2,000 per child to $2,200 per child. The refundable portion is $1,700 in 2025. Estate tax, that's another rich people thing or wealthy people thing. Estate tax was 13.99 million single, now it's up to 15 million. It was 27.98 million for married, now it's at 30 million for married. No tax on tips. No tax on tips. You can deduct up to $25,000 per year from 2025 to 2028 on any tips you have. And then what that means is if you're getting paid on taxes, so now let's say you get tips and then you got $30,000 in tips, you only got to pay taxes on $5,000 of it. That's what it is. It's up to $25,000. Overtime. You can deduct up to $12,500 on overtime pay. So if you work your job, you're still gonna pay the taxes. Then you work overtime, you get another $12,500 on overtime pay. And this is all middle class and lower middle class. Because understand, the wealthy or the rich people, they're not working overtime. They're salary workers. So those things do help the middle class and poor. Now, it is some things that I pointed out. This is rich people stuff. Salt tax is rich people stuff. Estate tax is rich people stuff. I'm not gonna deny that. Auto loan interest. You can deduct up to $10,000 on annual interest on new loans from 2025 to 2028 only on American-made cars. So now for the people that was, the people that's buying cars and then, you're paying all the interest, if you buy American-made cars, the Fords, the Teslas, there's a couple out there, GMs, but only certain GMs, and not all of them, only certain. And it's the same with the other ones. Tesla is US, but Ford is like 80%, and then GM, I think, is like 60% of GM cars. But if it's made in America, US cars, you can deduct up to $10,000 on annual interest on the vehicle you pay. That's never happened in history. Never happened in history. And then again, that's a middle class, lower middle class, because usually those people are the ones that pay monthly payments and pay the interest. Now you can deduct that interest off of your taxes now, but you'd have to buy American. That was out there. Another one, Trump accounts for child savings. It's a one-time $1,000 credit for accounts for kids that's born from 2025 to 2028. What that means is they put $1,000. Like, let's say you have a kid today, they put $1,000 in an account that will gain interest or whatever between 2025 and 2028 for the child that's born. Who really needs that? The rich, the wealthy really don't need that, but that's another thing out there. Charitable deductions for non-itemizers. So for the people that don't itemize and just take the standard deduction, you can write off $1,000 if you're single. You can write off $2,000 married joint. So that's out there. So those are the things that's in the, big beautiful bill or whatever they want to call it. But understand, these are just the facts and the things that's out there. And I made sure I took it from an opposition site that's opposed of the Trump candidacy or whatever to talk about it, because of course they not gonna make up something in his favor. They just gonna talk about what's real and what's not, and they may skew it. But I took it from their website, so I'm not going to Fox News and making it seem like it's way better than it's not. So that's where that came from. I'm gonna hit a couple questions right now. Frank said, be sure to check an updated flood chart and buy flood insurance, particularly if you're in a flood zone. Especially if you're in Florida. A lot of people for the last hurricane, especially on that Palm Coast, that inner coast of Florida, they got screwed. They got screwed. No, Jay is not used cars, but you get screwed. They got screwed because they didn't have flood insurance, and that was more of a legacy play. And what I mean by a legacy play, it was most of those people, and these was middle class to lower income people that didn't have flood insurance, and it was because their parents, grandparents, what have you, bought these properties on these coastal lines when the rates was very cheap. And then, of course, they kept it in the family, but the generation today couldn't afford the property plus insurance plus the flood insurance, because flood insurance is extremely high. I'm talking thousands upon thousands a year. And then they was affected by it, so they just canceled the flood insurance altogether, and they was impacted big. And when buying a house, I do agree with Frank when I'm saying if it's in, if it's not in flood zone X, meaning that there's no historical data as far as floods, I'm gonna be honest, I don't partake in it at all. I mean, even if it's investment properties for me, if it's on the fringe, then I need a crazy, stupid low price, and then I'm gonna, redo the whole ergonomics of the land around it just because I think it will flood. So that is something that you need to look at on a large scale, But that was a good call out there, Frank. How about used cars? And I believe Jay is talking about the new tax bill. This is for new cars only. As far as I can read from the bill, it's new cars only. You can write off the interest for American-made cars. Do you know how Medicaid will be impacted? And this is a question from Levita. Yes. Well, I know some parts of it. I'm not going to sit here and say I read 973 pages of the bill. Hell no, I ain't do that. But what I did do is I looked how Medicaid will be impacted. I know a lot of people are on the fringe saying, oh, they're cutting a lot of people off of Medicaid. And then now I will leave this to y'all. And please comment in the comment section, in the chat section. If an able-bodied worker, so let's say me, I'm 42. Sorry, don't celebrate. But I'm 42. I'm able-bodied. I have a kid that's over the age of 14. And I'm able-bodied, but I'm just going to sit here and veg out on Medicaid. Is that fair to the people that's working paying taxes? I don't believe so. It's a mandate, and those are the things that's happening in Medicaid. The people that are able-bodied workers and their children are over the age of 14, their children are over the age of 14, they have to go look for work 20 hours a week, or they have to work 20 hours a week. If they do that, then they stay on Medicaid. Pretty easy, right? I mean, for us people that's been on unemployment before, that's a mandate also. It did kick off people who was not U.S. citizens on Medicaid. If you're not a U.S. citizen, you can't get it. Anybody got a problem with that? Please comment in the comment section. But when you hear on these news media channels saying they cut and they kicking all these people off of Medicaid, they have to do the bare minimum. And again, I always tell people to study history. And the reason why I say study history, because people don't understand. With the Trump mandate saying that people have to go look for jobs or work 20 hours a week to keep it, people don't know that the actual mandate was 30 hours a week when Bill Clinton was in office. But just nobody enforced it. So he took 10 hours a week off of it. So everybody talking about the boogeyman, but especially if you're on the left, you're talking about the boogeyman, but the truth is it was way worse when the left controlled how Medicaid worked. But again, nobody enforced it. So that's out there. But Medicaid as a whole, how it's been running, if you meet the actual qualifications and you're not just vegging off the system and you're not just taking advantage, then it's still the same as always. And I guarantee you, people that's watching this channel, they got a friend, relative, or cousin that's been taking advantage of Medicaid. They just writing the ship. That's all it was. And if anybody got anything that they found that was different, opposed to what I'm saying, please put it in the comment section, because I'm willing to hear it. But I know I do my research and I don't just be spitting off the cuff here. What else we got? Jay, what do you think are the top 5 things that we should be concerned with in the bill? It depends on where your income comes in at. If you're in the bottom 60% of taxpayers, you have nothing to worry about. Just being honest. You have nothing to worry about. Your taxes will stay low because they fixed because for people that don't know, the Trump tax bill from when he was elected first time he was in office, he would have, if nothing got passed, they would have jumped up, the tax brackets would have jumped up in 2026 or the tax year 2026. This one made a lot of those cuts permanent. So again, all the things that I named, and I told you what will help the middle class, what will help the rich, you don't have nothing to worry about. Now, did they give concessions to the rich that I don't believe that they should have gave? Yeah. And unfortunately, I'm talking about myself included. It's some concessions, and that's why Elon Musk is, complaining about it, because he's sitting there like, well, what's the purpose of Doge if we're going to cut expenses, but then we're going to raise the deficit another $5 trillion, like $3.6 trillion, but eventually it'll get to $5 trillion. I agree with Elon Musk on that fact. But the bill itself for the middle class and poor, I 100% agree with it because it benefits the middle class and poor. But it also gave, to me, egregious benefits to the ultra rich. I mean, I was fine with paying the taxes over the salt tax. I was fine with that. But that was a benefit. But the crazy part is he gave the salt tax, he raised the salt tax to $40,000. And what that means is people who pay more than, $10,000, $30,000, $40,000 in local taxes, they can write it off against the government. For the people that don't know what salt tax is. So them raising it is actually a benefit for the people who have assets and different things that's going on in those areas. But unfortunately, people get upset about it, and they think that it was a partisan bill, but 95% of the states that benefit from the SALT tax being raised are Democrat-run states: New York, New Jersey, Hawaii, California, Oregon, Washington, New Hampshire, Delaware. All those are Democrat-run states, and those are the ones that, and I'm looking at a chart right here, that will benefit from the SALT tax being raised. So it really wasn't that partisan as people think they was. What else we got here? When will the Medicaid thing go into effect? The Medicaid will go into effect. Let me look it up. I don't want to tell you wrong. It will go into effect October 1. October 1, 2025. That is the physical new year of the government. So our new year, when it comes to budgets and things like that for the government, is October 1st. It's not December 31st or January 1st. It is October 1st of this year. That's when all of these things will be implemented and go into effect. What else? The new federal work rules will require beneficiary, blah, blah, blah. Well, the work rules, period, start December 31st, 2026 for most states. So I take that back. So the budget itself goes into effect October of this year, but the mandatory rules, they giving them like a whole nother year before that stuff goes into effect. So December 31st, 2026. Sorry, I just seen that while I was reading. But yeah, so now with that, first I'm gonna go to owning jobs, and then I'm gonna go to what I see in the stock market that's very apropos and things that looks interesting. Owning jobs. I mean, I've been on the calls with a couple people this week, and hola, Jamie. And then I've been on a couple calls this week with people who talked about, hey, you know, I started a business, and I'm saying this not to discourage people. I'm not saying this to think that I'm talking down on people, because that's not what I'm doing. And then so they talk about the business, and then they talk about how they're putting in, you know, 40, 60, 80 hours doing the business, as far as they're doing the work of the business. It sounds good. And I'm saying this now so people can start thinking different, not to disregard what you're doing or telling you to stop doing what you're doing. But when if you have quote unquote a business and you're doing all the work for the business, you do not own a business. You own a job. I paused on purpose to let that marinate in your system. You own a job. And what I mean by owning a job is a business can be passed down to your kids. But we know, especially as parents now, kids don't want a damn thing to do with what the hell we doing. So if you can't pass it down to your kids, then it's a job. And what I mean by that, so I'm gonna go to janitorial services, because that was just a call I had like literally right before this live. And you know, somebody was saying like, yeah, you know, I own a janitorial service. I was working all night. I'm cleaning buildings, and I said, good. I was like, it's good you own a job, but you got to make it a business. And then I had to, with having these conversations more than I should, I had to stop them before, because I knew what their thought process was. They was thinking I was crapping on them, saying, oh, you don't know what the hell you're talking about. You don't know what the hell you're doing. I said, no, you own a job because you're doing the work. When you own business, you don't do the work. Somebody else does the work, and then you still get paid for it. This is a simple answer on if you own a job or own a business. If you don't show up that day, will you still get paid? That's it. If you don't show up for a week, will you still get paid? That's the difference between owning a job and a business. And then I tell people that's right there at the cusp. They're only one step away from owning a business. Like the conversation I had right before this call. I said, You're right there. You just don't understand. Instead of you going out there, blood, sweat, and tears, making sure you clean all these buildings, you got to hire people. Of course, it sucks early on because you making the money and you trying to take care of your family. But if you hire go getters and do the job, and the only thing that you do as a business owner focus on acquiring more contracts, more businesses to clean, and then you keep spreading out employees to do that, then there is no work for you. I mean, no work like physical labor for you to do. It's all about handshakes and kisses and babies. Now with that, once you have that built out to, 100, 200 contracts, now you can pass off the income to your kids. But if you're going to sit there and be sweep, mopping, buffing floors all day, 10 hours a day, these kids ain't trying to do that. That's the difference. Business versus owning a job. Now, for people that's owning a job, I salute you. Keep doing it. But always think of how to level up where you can hire people and you can focus on the main thing. The main thing is keep acquiring contracts. Because if you down there buffing, sweeping, mopping, cleaning these floors, and I'm just using the janitorial service, you don't even have time to keep acquiring. And that's the key element of it. You keep acquiring, everything else will fall into line. But if you sitting there down in the mud with the employees, then you on a job. So don't shoot the messenger. I'm just letting you know. Like, I'll give you a reference. Like, I see a lot of people own rental properties and they manage the rental property. Then they'll be like, oh yeah, I got two. It's just too much work for me. Do you really think, and y'all know y'all kids better than I do you really think your kid's gonna sit there and put on their two belt every, Tuesday, Wednesday, Thursday, and then answer calls every time attending call? When they're in their 20s and 30s, they want to go out and party club and hang with their friends? But I guarantee you, if you owned a business and then you had employees managing the business and then the money was coming in, and you could be like, all right, well, now the new person y'all talk to is, your son, your daughter, after you pass away, of course, and they're just receiving the money. They just have a phone call here or there just to say, hey, yeah, this is what we want to do. I guarantee you is more applicable for them than actually sitting there doing the work. And I'm not here saying try to breed lazy kids. I'm just saying most kids don't want to do what their parents did. No matter if it worked or not, that's not what they want to do. And I'm not one of the people that say, oh, well, you got to sit there and force your kid to do what you was doing because it worked for you. The economy and times change all the time. So, and even my son, I'll use my son, for instance. My son, he's 11 years old. I can show him accounts with the money in it. I can show him what I do and how I sit in front of a computer. He loved the computer video games and all that. My son don't want no part of it. He's like, heck no, I want to be a veterinarian. That's where he at now. He's 11. I mean, it might change, but right now, that's not what he want to do. But he's more than happy to say, oh, well, I just got to sit here and then they give me money. Yeah. But I don't expect my son right now at 11 years old, based on where his mindset at. Will it change over time? Hopefully. But I don't expect him to go out there and drive properties, knock on doors, try to create deals, and try to conversate with people. My job is to build an empire, build a structure where he can benefit off of it and then see where he can add value to it. That's how it is. If anybody got any questions, please hit the chat box. As far as the stock market goes, the stock market right now, and we talked about this last week, we talk about it every week. We talk about where the economy is at, or where the stock market is at, excuse me. April 7th, we hit the low. I was screaming up and down, telling everybody this is the time, especially if you're new out there and you had never invested before, this is a time to buy. Blue Flare, go ahead, send a question. I'm still with you. I'm with you. But April 7th, I was telling everybody, especially before that, when the market was going down, I saw the 8 EMA on the daily and weekly crossover the 21-day EMA. I said for people that's new to the market, this is the best time to buy. And the market go down, it's just the more you should invest. But so now we look at it. January 3rd, we had a short session in the market. And magically, The S&P 500, that's my benchmark, closed at all-time high. Closed at all-time high. So that's where we're at. We're at an all-time high right now. And for people that know me, and I'm not a fan of going crazy at an all-time high. I am the ultimate contrarian. I always tell people when the news media start talking about the stock market, then you're late to the game. Now, when the stock market was going down, only thing people talking about is doom and gloom. I always say you have to do opposite of what everybody's talking about. You have to be a contrarian if you really want to make money. Now, everybody in the market at a whole is saying the housing market right now is at its worst time. No, actually, it's at its best time if you're really paying attention to it. But the news media is saying it's at its worst time. I know a lot of people in this last month, people that listen to this channel, that actually put in the work and got deals done. Hell, I just got under contract for another deal. And I actually plan on doing 3 or 4 more deals. And for the people that's been on this channel for a while, they know that between June and September, I rarely do deals. But we talked about this again also months ago, that I believe that the housing market for 2025 or the spring buying season, summer buying season will be one of the worst on record. So I'm just here to take advantage. If I find a deal that just so advantageous to me, I'm going to take advantage of it. Forget the parameters that I had set, and then when September, October gets here, I'll just take advantage more. And that is my ultimate plan. But yeah, so right now the stock market itself is at all-time high. I'm not saying it's not a good time to invest, because every day is a good time to invest. The only bad time to invest is the day you miss investing. So every day is, but again, it's layers to it. So even though we're sitting at an all-time high on the market, I say you should put something in there. So let's say you have $150, $200 a month that you could put in the market. Even though we had an all-time high, I believe that you should be at least putting 50% to $100 into the market. If that's all you have, then put half of it in there. But still, put the money into your brokerage account and get ready for a downturn to happen. Last week I said I'm still maxed out on what I want to invest, but I think that we will meander around this all-time high, maybe get 2%, 10% higher than the all-time high that we is at. And then I believe the big, beautiful bill will come out, which came out after the market closed on Thursday. And then I think we'll have some downtrend going. If we do have that, I will go to 125, 150% more invested. And I will just, like I said, I will cut off the lifestyle that my family is used to invest more money. But for people that's just starting out, if you can invest $100 a month, I'll start investing 50. When the market comes down, I will put the whole 100 in there, and I will keep putting the whole 100 in there until the end of time. But that's exactly how I invest. That's how I invested from the beginning of the time. I mean, when I started investing at 28 years old to now, and I've accumulated a lot of stock. I've accumulated a lot of real estate businesses, just doing the contrary thing. So in the stock market itself. But now if you're talking about just one individual stock that I'm looking at, and hopefully I got some professionals out there that can tell me if I done lost my damn mind. But the stock that I've been looking at that I think is undervalued, and I think is going to come down a little bit more, but I think it's going to have a big upside. And again, this is not financial advice. This is just me looking at the charts and something that I might pull a position in the very near future. When I say very near, I mean Monday. But I said might. I didn't say I'm 100% going to do it, but I might. The stock ticker symbol is OSCR, Oscar Health. I mean, of course, big, beautiful bill come out. It's going to be some removal from the Affordable Care Act. There's going to be a lot of healthcare things that, shaking and moving. But with 10,000 baby boomers retiring a day, avenues out there, people needing affordable healthcare, I do 100% believe that the healthcare space is a space that will make it shake. As far as Oscar itself, the all-time high is, I think, 23.79. As I'm looking at the chart here, Well, the all-time high is when it IPO'd at 37. But in the last 52 weeks, the high is 23.79. Right now, it's at 16.47. If I can get it below 16, I would love it. Of course, y'all know me. I'm gonna sell some puts to make some money. Probably at 16, pick up 1,000 shares there, and hopefully it goes down to pick up a couple thousand shares more. But this is for my stock people out there. This is not for the people that's just beginning. Keep it simple. S&P 500, the QQQs, and then you got variations of it in the ETF space with the VOO. You have variations of the same things that I'm talking about in the mutual fund realm, like Nasdaq 100, USNQX, or FAXIX for as far as the S&P 500. You don't have to do nothing special. You don't have to sit there and be a nerd like me and sit there and study stocks and look at financials and do all that other stuff. Now, like when I'm talking about individual stocks, I'm just searching for alpha. 55 to 60% of my portfolio, my family's portfolio, when it comes to stocks, is in the S&P 500 and the Qs. My son, 11 years old, his 100% portfolio is in the Qs. All the stuff that I'm talking about is just for those people that's just looking for that extra on top of that. Because, that's the only thing that you need to do. You don't need to do all this extra stuff that we're talking about. But I like talking about stocks because, me, I got a little risk in me. And so I throw the risk out there, but you don't need to do that. You just need to be consistent, on time, discipline, to keep doing it no matter what happens. The stock market say the stock market's going down, you keep investing. Me, when the stock market's going down, I invest more, but you just keep investing. The news media talking about the world's coming to an end, you keep investing. The crazy part is those three things, SPY, the QQQs, FSAIX, it will not go to zero unless the whole world is about to explode. So if it goes to zero, we got other problems besides the stock market. You ain't gonna be worried about money if those things go to zero, but they're not gonna go to zero. So just keep investing. And then somebody, if you don't believe me, look at a chart of the SPY since the inception of the fund. The SPY has went through the Great Recession, World War I, World War II. It went through hyperinflation in the 80s, 70s. It went through savings and bank loans. It went through Y2K. It went through 9/11. It went through COVID. It went through the housing crisis. But yet here we are at all-time highs. Only thing you have to do is just keep putting money in, no matter what. No matter what. And that will save you from a lot of heartache in the future. Let's see what else, other questions we got out there. I know I'm running long. I haven't. How do you feel about diversifying with international index? I do not believe in diversification. I mean, I know people say it all the time, and I'm saying that, and that's a great question, Jordan. I love that question. The reason why I don't believe in diversification because it is a myth that the media tells you. And the reason why I say it's a myth is because diversification is not to build wealth. Diversification is to retain wealth. First, you have to build it to retain it. So when you're building it, you need to be concentrated on one thing and do it over and over again. So now if you in the SPY, or if you get into real estate, or if you get into one of these things and then you build it to $1 million, $2 million, then you diversify across other platforms so you don't lose it. But you don't use diversification to grow it. Just want to put that out there. And trust me, I'm not saying this is not new news. Only thing you got to do is look at the Berkshire Hathaway. I think it was 2012. Warren Buffett and his partner Munger, they talked about their diversification. Or you just look it up on YouTube and say, how did Warren Buffett feel about diversification? I guarantee you, he's going to repeat the same thing that I just said. Guaranteed. So everything that I'm saying is nothing I made up. This comes from research of me doing this over and over and over again. So there's not I have the secret sauce. It's me doing the work that a lot of people won't do to give it to you. But you don't have to diversify. You want to put a lot of money in a single location and have that grow. And then once it grows, then you diversify. If you spend all your time buying 10, 20, 15 stocks, you're going to be sitting there with no money the whole damn time, because diversification is for protection, not for growth. What else we got here? A lot of private healthcare insurance companies getting the pump in price, and you're right. They're getting the pump in price. Jordan, that's another great question. They're getting the pump in price because everybody needs healthcare. Like I said, baby boomers, 10,000 baby boomers are retiring every day. They need it. I was talking to a gentleman yesterday that runs a healthcare website. Yeah, it's needed because most people can't sit there and pay the full price of what it costs for healthcare. It's needed. But the crazy part is it's expensive. So you got to pick your poison on which one you're going to do. But yeah, it's a lot of healthcare insurance. I mean, United Health, they took a big hit on the chin as far as stock wise, especially with the assassination of the CEO or what have you. And if you follow social media on that endeavor, you saw a lot of people was in agreement because healthcare prices are expensive. I don't think there's a president alive that can fix this healthcare crisis. And the thing is, healthcare costs will go higher, and it will keep going higher, and people will have to pay it if they want to survive. Let's call it what it is. So that's what it is. Ton, you're right. Keep it simple. Can you talk about how not to get a lot of stocks on, or having just one or two and its benefits? Yep, that's right, Jay. You're 100% correct. I am not a diversification guy. Yes, do I have a few stocks? Yeah, I have a few stocks, but I have a crap ton of money in those few stocks. The far as diversification I go, when it comes to stocks, is S&P 500, NASDAQ. But I have a crap ton of money in those vehicles. Like, I've spent my time, and people that follow this channel, I tell you, the house that I live in now, it wasn't because I diversified. I put a lot of money in Bank of America stock when it was at $4.92. The stock appreciated, and then I paid for this house cash. That's how the wealth was built. And then from there, I put a lot of money in Apple. More than I should, but a lot of money in Apple. I put a lot of money in each individual stock. SoFi, I got a crap ton of money in SoFi. But I'm not sitting here like, oh, well, let me do SoFi, Robinhood, Bank of America, all these to try to diversify. No, I want as much money as I can after doing the work. A lot of money, as much money as I can after doing the work to make the most out of it. But now I'm at a point where I'm diversifying. Like, me going into real estate is a diversification play. Me buying gold, silver, crypto, that's a diversification play. But that's to keep. I still want to grow, but it's to keep. But it's a lot of money. But to start off, and that's what I did, was I started off by putting a crap ton of money in Bank of America stock only, and I just sit there and watch it. And I just kept putting money in there. And I kept putting money in it. And I kept putting money in it. That's it. Now, when it grew, of course, now I have something that I have to protect. Then, so after I bought this house, I went and bought a condo, another building, a business, and then I just bought rental property after rental property after rental property. But everything that I do, I put a crap ton of money into it. So stop thinking diversification is going to get you rich. It's not. Consolidation, focus on one thing, that's the thing that's going to get you there. And Jay, you're right. A bunch of money spread across 50 stocks does nothing but it just sit there and just drive you crazy. Oh, whiskey. Oh, that's my boy Starsky. How's it going? Oh, he said the beard's getting a little puffy. Yeah, no, I'm looking a little rough. Yeah, you're right. But hey, how's it going, Starch? What else out there? I do have one question. So I'm putting a small portion in the SPY this month, about $65 to $85. Will it hold, or will it hold if I just put it? It don't matter if it holds. You just starting out. Actually, for the people that's just starting out, I love this one. For the people that just starting out, you want to buy, let's say the SPY, and you're hoping that the market goes down because you want to keep buying at lower prices. We already know historically it's going to be higher in the future. You want the price going down. Hell, I've been investing for 15 years, and every time I buy, I still want the price to go down so I can buy more at a cheaper price. Because I'm 100% focused on accumulation. I know because I did the work on what I own. So the cheaper I get the price, the more shares I get, I'm all for it. I'm always for the stock price going down. Please do not, especially if you're starting out, please do not hope that, oh, where we're at an all-time high, I'm going to put $100 in the SPY and I hope it goes to the moon. Even if it went up 100% from there, that means you made $100 profit. You want to put thousands of dollars. So again, you want it to go down for a while so you can keep putting money in there. Then when you get 10, 15, 20, 30,000, 50,000, 100,000 there, then it goes up 100%. Now you did something. But please you do not want to buy stocks and you want it to go up instantly. You want to build a huge position. When I'm saying I put a lot of money in there, I'm not talking about $100. I'm not talking about $1,000. I'm talking about hundreds of thousands of dollars. So when it goes, my family will benefit from it. So that's the thing that you want to do. Do not start buying stocks and just hoping it goes up. You want it to go down. I guarantee you, it will benefit you very much in the future. Oh, starts in NYC. Yep, there you go. Yeah. I guess you're asking if you put the money in there and I'm talking Blue Flare X. Will it take the money? I'm guessing that's what you're saying. What it means is when you put the money in it, it's gonna take it at whatever price. But don't worry about it. You're just starting out. You just want to keep putting money in there, no matter the market's up, down, or indifferent. You're hoping, but I'm telling you, you're hoping it's going down. When it goes down and everybody's screaming bloody murder, your mom probably crying like, "Oh my God, the market's going to an end." If she tell you that, or mom, dad, whoever, sit there and say, "Oh, I'm gonna sell my 401k," you gotta sit her down and say, "Mom, you need to up the ante or up how much you put in your 401k when it goes down." Because that's exactly what I do. I only tell y'all exactly what I do. I don't make it up as I go. And I've been saying this for people that's, following the channel forever, even the people that was on the Discord, they know. I only get excited when the market goes down. Because I'm looking like it's at the mall. It's a 50% off sale. I'm all for it. But I know I've done the work. So I'm putting my money where I know it will get to where I want to eventually. But yeah, so Oscar Healthcare, that is one that I am very interested in. And I am more than likely going to sell some puts to acquire those shares. I'm going to put it at $16. I do see the 8 coming below the 21 on the daily. So I'm going to work on that. But Oscar Healthcare, OSCH is the ticker symbol. I'm going to start building that up. On a weekly chart, it came down to support and closed that support. And we might have some downward play. I mean, even though I'm going to buy some now, I'll be more than happy with it coming down to 14. But if there's no other questions out there or any other subject matters that I probably missed, I think I hit them all. Y'all have a good rest of the day. Happy 4th of July and all that other good stuff that's out there. And I'll see you next week. And again, come with the questions. I'm here to answer it all. I want all the smoke. And I'm looking for a couple got you questions, but y'all will find out that I actually do the work and I'm only talking my playbook and I don't just make it up as I go. But with all that being said, thanks everybody for joining. I'd like to keep this less than an hour. So y'all have a good one and I'll see you next time.